Greetings. Our show today is primarily focused on two topics. Number one, Elon's sales result in an increased share in Tesla. The second thing we take a look at is that the folks at B of A have downgraded Tesla but upgraded Lucid and Rivian because of what's called second mover advantage. And they chose a strange time to do it because the folks at Lucid are now scared to death of the 4680. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy this show, would like better information for better investing and trading, please join us on Patreon. This is a copyrighted broadcast. Any reuse of the information provided is prohibited. And we greatly appreciate it if you keep your channel, and we'll keep ours, even if you don't know anything. So today, what I wanted to start off was the fact that pretty much the last month has been weighed down largely by what Elon has been doing with shares. As you know, he's been selling about 1 billion shares a day, every other day or so. And the plan was for him to sell about $21 billion worth of shares, and then that would cover his tax obligation from exercising. So this has been a very interesting sort of thing to keep track of. I initially thought it was horrible news that he was selling, because when you have large numbers of board members and CEOs selling shares, it suggests that if they're getting out, should you be getting in? The answer to that has turned out to be a little more tricky than a lot of people have discussed. The fact is that by, I believe, mid-22, Elon has huge amounts of stock grants that if they go unexpired, they would end up being worthless because he didn't exercise them in time. So his cost basis is $6.40 a share on Tesla, and there are billions of dollars in shares that are at stake. So he pretty much has no choice but to sell. One of my kind of friend advisors to our show is just discussing the fact that it's really bad news what's been going on with the sales, because should he have simply gone to a large bank like Goldman Sachs and decided to offload the shares that he would need to sell there, and then they can, in theory, gradually get rid of shares as they need to without tanking the stock with the manner of sales that's been going on. So what I wanted to concentrate on here today is there just seems to be a real problem going on right now, which is kind of anytime Elon does anything, it seems to result in a rather ugly situation where any negative angle that can be taken on that action is sort of heavily emphasized, focused upon, and then afterwards people will find out that there's sort of better news that's lurking with that situation, but they haven't, they haven't had a chance now, or they now have the new news and the quality news, but they're unwilling to accept it. And I just find this fascinating at how Tesla is constantly treated in the same manner all the time, and I believe it's very unfortunate and definitely impacts the stock. So the answer to this whole thing is the fact that while Elon has been exercising shares in order to cover his tax burden on the shares he exercised to purchase, again, his ownership stake at Tesla has actually increased, which suggests that there's no drop in confidence by him in the company doing well, and therefore not a good reason for other people to potentially be selling the shares either. It was nice to see the bounce back above 1,000 as the market is digesting higher inflation numbers, and so we're hopeful that we see everything moving back up as we get kind of good news coming out in terms of production numbers. And that brings up another item for the week, which was, the production numbers came out at, 54,000 perhaps for both October and November. We're expecting about 63,000. Now, those numbers are a little bit off because typically the difference between production and sold can be between 3,000 and 5,000 units. So in theory, I believe the production numbers are actually higher than we've seen, and the state might not be able to identify all vehicles produced because, particularly from China, the number of vehicles that have been produced continue to increase. And we actually have some new information about what's going on in China that we'll be providing in another show this week. But clearly, if you multiply 3,000 vehicles times 12, 600,000 is about the number of the run rate for China right now, which is an excellent clip of running. And I believe that this sets us up as that facility keeps growing with the latest $180 million increase in spending by Tesla for easily climbing above 1 million vehicles for the coming year on an annualized basis, even if it's not immediately happening, because they're still ramping up how big and how much production will come out from those facilities. So, I just think that the bad news Tesla program is ugly. The second thing we wanted to cover today is B of A made a choice to give a neutral rating on Tesla while giving Rivian and Lucid upgrades. One of the main reasons for this is a concept called second mover advantage. The suggestion is that because both of those companies are founded by former employees of Tesla, those employees have the advantage of knowing every detail of how Tesla operates, and now they can go ahead and take that information out, refine it, and come back with new products that will make them superior to Tesla. So in theory, this kind of works because that's how things actually happen a lot in the technology world. The problem with this, though, there's a lot of problems with this. One of the elements is that Elon has talked about the difference between prototypes and scale production is quite different. And Rivian supposedly delivered cars, but they're actually delivered to employees and are somewhat buggy at this point. And Lucid evidently has a more finished product, but scale production that's sizable and at a certain price point doesn't seem to be in their wheelhouse yet. Now, something funny just happened 2 weeks ago, which a lot of people didn't really look at heavily, and that is that the CEO of Lucid made a comment regarding the 4680 battery that this is a pure fantasy. He didn't put a fantasy out there of whether or not it could be done. He was saying it was a fantasy relative to being able to cool the larger device with the same efficiency that they were doing with the 2170 batteries, which is what the folks at Lucid are using. So I thought that this little comment by the CEO of Lucid was terrific. The reason is that it really shows that they were very comfortable in talking with their investors with the fact that they could deliver superior performance for their vehicles by enhancing what they already knew about Tesla's thermal management systems as well as their batteries. And so they could produce the same batteries as well as a thermal management system that was comparable. Well, guess what? The 4680 screws that whole thing up, which is, I believe, why he was a little bit angry, because Elon put out a whole bunch of specs about what the 4680 will do. There are no patents on the 2170, but there are patents on the 4680. So the problem that pops up is, as Lucid continues to prepare to go to scale production and a large scale possibly, and looking to reduce costs and therefore be able to offer less expensive vehicles, they now have a huge problem, which is how are they going to deal with what the 4680 allows, which is a lot more power at a lot less cost, and Tesla chasing a sub $30,000 vehicle, which dramatically would increase the market size and penetration of the company, and would also do well across the whole product line to enable Tesla to have production costs at everybody else's, or Tesla's break even is going to be way below everybody else's, and therefore production costs a lot lower, so they can, in essence, get very large profit margins while others are, in essence, losing money. That includes Lucid and Rivian. So this is kind of fascinating because it's opened up a new wrinkle in how Tesla's going to win. If you'll recall, Tesla was actually running battery research out of Canada with a professor there for several years, while all the research in batteries like the 2170 produced by Panasonic were using sort of research from Panasonic, and Tesla didn't have full access to how things were being done by Panasonic. Now, after 5 to 7 years of research, the 4680 comes up, and it kind of shows what those researchers were doing and preparing for as Tesla looked to move in and produce its own batteries. So this now presents a really interesting challenge, which is there are these new companies that thought they were going to wipe Tesla out, and now that they have to deal with figuring out how to reverse engineer and build this new battery, it introduces the question of, will they get run over by Tesla as the power of the new battery is felt by the marketplace, and particularly these new competitors. It also kind of shows you that there are a lot of little fiefdoms that are hidden within technology companies, because they have to acknowledge that there'll be employees that leave in the future, and having all of your intellectual property in the hands of all of the folks that work there can be bad news, because they may be able to take that IP to other places. And with the 4680, the fact that it's been patented shows that Tesla recognizes that this is a potential issue that has to be managed. So I think this is awesome for Tesla. The folks at B of A are very bright in terms of their second mover advantage discussion. But the problem with that right now is that, there is a second mover advantage, but think about what happened between Nokia and Apple. Once Apple started delivering smartphones, even when Nokia came out finally with their own smartphone, it didn't do much. And the reason is that the ubiquity of Apple in the hands of smart folks, and the ability of friends to teach each other how to use this technology, etc., is the tipping point that Tesla is entering. So yeah, you got second mover advantage going for Lucid and for Rivian, but I really don't think this is going to do anything at all to the competitive advantage Tesla currently has. And the more vehicles in different segments issued by Tesla, the more difficult it's going to be for them to be unseated by new competitors. The final thing I'd like to say about this, and we'll probably do a whole show on this issue, is that there are some lurking supply chain issues that nobody's really discussing. One of the biggest ones is that I actually spoke with an executive that actually bought and builds lithium mines around the world and has Tesla as a customer. And what they pointed out was that they're totally tapped out in terms of supply currently, and bringing new mines online could be a 3 to 5 to 7 year proposition for producing more. So anyone can get a vehicle produced, but the question is, can you get scale batteries to deliver it once they're produced? And it's nice to say we have a battery manufacturer we've partnered with, but if that battery manufacturer does not have the backward integration to all the sources, for example, a lithium mine behind them, or 2 or 3, it might end up with them stuck in a line waiting at the same mines with other individuals, and they just can't deliver the numbers that they've promised because they can't get supplies. And obviously cobalt is one of those, and it comes out of Congo and it's kind of dangerous, and that's another example. But there are a lot of elements to how things will work in the EV world that were pretty simple to deal with when we're talking about regular automobiles. So if you say there are 85 new vehicles announced and they'll be introduced, every time we hear these big numbers, they often talk about we're going to produce all these vehicles, but they never talk about how the supply chain is going to work to allow those entities to produce at scale successfully to compete with Tesla. So we'll stay tuned, keep you up to date of what we're learning and how all this is working out. But I do think it's interesting to watch the latest and greatest competitors to Tesla. They're going to destroy them, but the logic, I think, is faulty because we've been seeing the latest and greatest come and go unsuccessfully over the last several years. And it's my belief that Rivian and Lucid are going to end up in the same boat as many of the other competitors, even if they do sell a decent number of vehicles. At any rate, this is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, please come back again. We do have some SpaceX shares if there's interest. Also wanted to thank you for joining us today. Interesting, our health tip for the day came from a doctor who's an anesthesiologist, and I asked her what her health tip would be, and she said to me, stay out of the hospital, because there are too many complications that can happen in surgery that you don't have to worry about if you stay out of surgery. So I thought that was an interesting suggestion of something to consider. Any rate, we have more below health tips to recommend. This is Greg for Teslafaninsight. Just German, au revoir, French, Lehithro, Hebrew, Choda Hafez, Farsi, Strasvice, Russian, Salam, Muslim, Heido, Swedish, Arrivederci, Italian, Asante, our friends in Swahili. And in Jamaica, we say, enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.